Good morning, everyone. I am Kainat Chainwala from Kotak Securities Commodities Research Team. And like every week, we will be diving into the key developments and trends that are shaping the commodity markets. From market movements to global factors impacting demand supply, we will keep you informed on all the crucial updates. So let's get started. Last week, commodity markets saw contrasting price movements across various segments, driven by a mix of geopolitical tensions, economic data, and central bank expectations. Gold and silver prices moved in opposite directions, reflecting divergent investor sentiment. Gold prices were buoyed by rising geopolitical tensions and growing speculation about a Federal Reserve rate cut. The expectation that the Fed may lower interest rates this week, alongside reports of potential increased gold purchases by China's central bank, lent support to gold. As a result, gold prices managed to rise, benefiting from a flight to safety amid geopolitical uncertainties. Technically, on the daily chart, MCX Gold February futures fell in the last two trading days but found support near the mid Bollinger Band. Price is still above the super trend 7.3, showing a bullish bias. Even if prices continue to decrease in the coming week, they may retain the support level of 75,550. The nearest support is located at 76,150. On the other hand, last week's high of 79,120 will operate as an initial barrier for price, and if broken and sustained, pricing may advance higher, testing the next resistance level of 79,700. Now, moving on to silver. Conversely, silver prices faced downward pressure, weighed down by mixed trend in the base metals. This was in contrast to gold's safe haven appeal, as silver's decline mirrored the retreat of other industrial metals such as copper. In the US, the latest inflation data had a significant impact on market expectations. The Bureau of Labor Statistics reported that the US Consumer Price Index rose 0.3% in November, marking the fourth consecutive month of this rate. Core CPI, which excludes volatile food and energy prices, also climbed by 0.3% in line with expectations. The key takeaway from this data was the cooling of shelter costs, a major driver of inflation in recent months. As a result, market participants increased their bets on Federal Reserve continuing its rate cutting cycle, with swap traders pricing in more than 80 bips of rate cuts over the next year. This reinforced expectations that the Fed will keep interest rates lower for longer, supporting both precious metals. On the other hand, copper prices experienced a pullback after earlier gains. Despite China's optimistic policy announcements, which included a readiness to deploy substantial stimulus measures in response to anticipated US trade tariffs on Chinese exports, copper prices retreated from a high of $9310 per ton to close the week around $9,050 a ton. China's leaders made their most dovish policy announcement in over a decade, signaling a commitment to adopting an appropriately loose monetary policy and implementing more proactive measures. However, the response to the same was muted. Talking about crude oil prices, WTI crude oil prices saw a notable surge last week, with prices rising by more than 5% to a 2 week high of $71.4 a barrel. This upward movement was driven by reports that the Biden administration is considering tougher sanctions on Russia's oil trade, coupled with expectations of stricter US sanctions on Iran. These concerns over potential supply tightness helped fuel the price rally. Technically, MCX crude oil December futures on the daily chart closed higher for the fifth time in a row. Price is above the 20-day EMA and the super trend 7.3, indicating a bullish bias. RSI 14 is over 60, supporting a bullish bias again. For the coming week, we expect the price to rise, but it may encounter an early resistance near 6150, followed by 6280, whereas initial support is at 5835, followed by 5750. Now, also the market's attention turned to a mixed EIA report, wherein the inventories declined while the production continued to increase, and OPEC's decision to trim its oil demand growth forecast for the fifth consecutive month in December. Despite the demand revision, supply disruption concerns provided enough bullish sentiment to push oil prices higher for the week. Looking ahead, this week is set to be data and event heavy, with key indicators and central bank decisions on the horizon. Market participants will focus on important economic indicators from China and flash PMI figures from major global economies, which could provide fresh insights into the economic health. Central bank meetings are also in focus, with policy decisions expected from the Federal Reserve, Bank of England, and Bank of Japan. While both Bank of Japan and Bank of England are widely expected to keep interest rates steady, the Federal Reserve is anticipated to announce a 25 bips rate cut. This expected easing by the Fed could support risk assets. Additionally, the FOMC projections will provide guidance on inflation, unemployment rate, and economic growth for the coming years. So, with this heavy week, we can expect more volatility during the week. On that note, we wrap up this week's discussion on the latest development in the commodity markets. Thank you so much for tuning in, and we hope that you found the insights valuable. And we look forward to having you again with us next week. Until then, happy trading. Thank you.